Hey, what's up, everybody? Merry Christmas and welcome back to Market Misfits. In this video, we're going to be continuing our training on the market cycles. So we've been covering market cycles, all parts of it. We went over the Wall Street cheat sheet, the psychology of all this, just to run through real quick. So this is the anger, depression, hope, and so markup. We're going to cover it this way. This is a Wyckoff method. It's well known among traders. I looked on YouTube, at the beginners tutorials for these, and they were like really complicated. So we're doing this as simple as possible. You're going to use regular terminology, not fancy, nothing fancy, so that people can understand it. So because this is necessary to know from the beginning. So if you're starting and you're not familiar with all the terminology yet, we're going to break it down in terms to where hopefully you can understand. And we're going to be covering some support and resistance. So support, just real quick, is when price gets turned around or rejected several times. Okay. Accumulation phase, coming off of a markdown phase. This right here is to trigger this is to trigger people into selling when it breaks here, and it also collects liquidity from stop losses. So if you remember, I was talking about margin trading, and we're going to place a trade on here in just a minute just to show people that aren't familiar. So how this all works. So we have a stop loss here. Let's say we have stop loss here. We go long right here or buy right here because it's broken out. This is not a strong impulse. What we're looking for is a strong impulse. But anyways, comes down and then wipes people out. So this is one of the characteristics that really gives this a stronger possibility of breaking out the next time. Because what we're looking for out of this accumulation phase now, after a markdown phase from the market cycles, accumulation, so markdown, accumulation, we're looking for an impulse, a break out of this. So this would have been a resistance, it's support, assuming price is up here. But when price is down here, it's just played like none of this existed. This would actually be a resistance zone. So support price, resist price from underneath, support price from the bottom. So support rejection from the bottom, resistance zone is an area where price has been resisted from underneath several times. But when we break out and we get our impulse, so we're looking for proof of strength in this accumulation that it's going to get leveraged here. So here's our move, our descending wedge into support. So now that price had broke out at this point, this resistance turns into a support. It's still known historically to turn away price. So descending wedge, this is our setup, breakout. We've been entering here. Another entry is over here when we get another impulse move off of this. So just like we got an impulse out of here, look for an impulse off this zone. Boom, 2 is good. A lot of times it will do this. Excuse me. These are the 2 that happen the most, so thought we would cover these. So we get our impulse out of our accumulation. The accumulation phase isn't always just a long, drawn-out deal. Sometimes it's really short. So this is the inverse head and shoulders. Here's our resistance, where price was resisting from underneath. Here's our support. Here's our liquidity grab. And then here's our setup. This is kind of where XRP is right now. We're about to take a look at that because it did not come all the way down to the order block when it broke on the hour, excuse me. So we're going to look at that in just a second. So anyway, so this is another common, it turns into an inverse head and shoulders. So we're looking for a retest, an impulse up out of here, and continuation. So then we get into a reaccumulation phase. So we go mark up from accumulation, impulse, mark up, uptrend, basically price continues. We get past this resistance. It was resistance when price was down here, and then it turns into support, gets rejection. Maybe we get another liquidity grab, and then we pop out of the top, continue, mark up, and then here's our distribution. Nice sharp jab up, and failure to go up, failure to go back up to the high, and then we start our markdown phase. So this is like a really simplified version, but let's go over here to the chart, the actual chart right now, and see what's going on. So actually, let's go over here. This is the victory from retail. This was the victory from retail. Here's our liquidity grab. It went below these lows. Not really covering that too much, but look at how sharp the distribution was. It's nowhere near as big as the accumulation's been. But anyways, we went distribution, mark down, redistribution, mark down, redistribution, mark down. So there'll usually be 3 or 4, and then you'll hit a bottom for each time frame. Now, on smaller time frames, there would be there's tons of these. And then on larger time frames, you're going to see less of them when you're looking at the whole picture. So here we're looking at accumulation. So that's a support zone down there, the yellow. We're going to use this right here as the order block right here. So that's what this means when you see this OB order block. So we got our impulse out. Here's our wedge as a retest. So we got retest before when price was down here. This was resistance because it resisted price historically from underneath. We started moving sideways. Here's our little liquidity grabs right here. And then we took off. So we broke out impulse. And if we look close right here, this is our inverse head and shoulders. So we went boom, 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 this. So this is why I chose that example down there, because a lot of times we're going to get an inverse head and shoulders. Sometimes it happens outside of the wedge. Sometimes it happens on the outside over here. Sometimes it don't happen at all, and it just falls. So anyways, we're not going to get into a whole bunch of detail on this stuff, but I did want to point this out because XRP. So here it is again. In fact, I consider this is such a far, this came down so far. I'll consider this distribution markdown. And then we have what? Accumulation again, because we're bouncing back and forth minus this guy in between this resistance. It's in the middle. So this resistance level, price is here. Okay, so we bounced up and down here for for 40 days, basically 40 days. Here's our pattern. So we broke out, and then here's our inverse head and shoulders. Boom, 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 boom. Like I said, it's not always like picture perfect, but the principles are the same. Boom and up. So here is our descending wedge right here, order block. This one pulled way down into this. Let me see. This one pulled deep down into this. Let's zoom in close. So this might have been a false breakout to get people to buy right here. I'm sure a lot of people got stopped out right here. I just wanted to point this out. Here's our entry right here. we actually did catch this move when it happened. Boom, here's that. And then here's our wedge right here. So wedge into the order block, you can see right here, it actually went way far down, but when it popped out, it popped way out. So here's our price action pattern. Normally, this doesn't come down so far. Normally, it'll stop around here somewhere. This was a deep one, and it looks like it grabs maybe some liquidity and ran up. So you can count this as two totally different cycles. But here we are again. So we have the same pattern again. Get rid of this. Actually drop this in the Telegram. So just these different options, because when we broke out right here, and I think I dropped this in the, yeah, we dropped this in Market Misfits, the Facebook group. We are putting trade ideas in there. So again, their ideas, just everyone to practice with a demo account. This did not come up all the way up here and form a nice high right here, but we're going to go off of this wick and we're going to count this like this for now. So get this out. So right here, we broke out of this area. Let's drag this guy over right here. Get rid of this. So we're looking at this right here because we did not come down and close this up. Let me get this out of here. When we got our impulse out of this accumulation phase that we're looking for, so we broke out right here. On a smaller time frame, this is descending channel into, it didn't really, this is what I'm looking at right here. And these are imbalances in the market. So even though there's a setup right here and we are long right now, and we bought right there. So let's see. So this is a fair value gap. This is when the market takes off. I don't want to get into too many details about this. But so we left behind these imbalances right here. So when this candle formed on the hour, there wasn't any retracement down here. So a lot of times the market will like to come clear these up, even though this is looking kind of bullish right now. I wouldn't doubt to see this come up and wipe these out and fill these gaps up. Anybody that's got a stop loss down here, boom, whack them out. Maybe something like that, or maybe we'll have a complete crash. We'll see what happens. But right now, to me, this overall, this is looking, with the sediment, this is looking bullish. So this was like a second option to see if we get that pullback and if we got rejection back down here. Let's actually get rid of these. And I just want to show y'all real quick how to open a demo account. So let's exit out of here. For those of you that aren't familiar with trading, then you can open a demo account. Go to trading panel down at the bottom of this. If you don't have trading view, I'll leave a link in the comments. If you want to get trading view, then you just open an account, come down here, trading panel, paper trading. So this is going to be just practice money. So what we want to do is, if we're going to buy right here, hit buy. Preferably this is not the best entry because we're right here at this high, but anyways, just wanted to show you. So you see it started us out in the negative quite a bit. So this is a big account. I would suggest getting a demo of something that you're used to, or something that you could, see yourself opening an account with. So this will be a stop loss here. Actually, we can go ahead and put it down here where this guy is. And this is why people get into this, but I wouldn't be focused on these huge numbers, but something realistic in the beginning. But the potential to make a lot of money doing this is what, and it's not, and here's where I think a lot of people screw up. And we'll look at Bitcoin and we'll get off of here, but is that they get so fixated on trading $1 billion account or something. And it's not about one position. See, this is not a good entry right here. Our entry is actually down here. But anyway, so I mean you can make a whole lot of money, but it's not gonna happen, to be honest. Like if you're new, it's not gonna happen really fast. The fastest way that you're gonna see it happen if you do start doing this, start leverage trading, is if you go the slowest way possible. And that's do every single thing that's in the program. Personally, it took me almost 4 years to listen to psychology and risk management. I did technical analysis until I was blue in the face. And I did really well at it. In fact, if I knew risk management, then I would have been consistently profitable long ago. But I didn't. I was hard-headed, thought I had it because I could guess which way the market was going more times than not. And that's all that you need when you're using a 1, 2, 1 point. You know, if you're using put it this way, if you're using a 1 to 3 risk to reward ratio, if it'll let us get to it, let's get this up here. If you're using a 1 to 3 risk to reward ratio and you have 10 trades and you win 3, you're in the profit. So you can have less than a 50% batting average and still be profitable. There's some other things that you have to do, of course, with risk management to make sure that you're losing the right amounts and winning the right, and getting the right amount of profits for all this stuff to work out. And there's a certain mindset that you have to have, and that is at the core of all this stuff. Don't get sucked into trying to just find out which way the market is going without going through psychology and going through risk management, because that stuff is first. That's why we're teaching market cycles, the fundamentals of things before anything else. We're not actually going to go into risk management and stuff in this group. But anyways, you guys, just wanted to show this. As you can see, we're already, let's see, 1, 2, 3, 1, 2, 3. We're already $2 million in the profit. So you kind of get the idea. If you didn't know, then that's what this is about. But to trade this much with this much risk, I mean, you need an extremely, extremely large trading account. But anyways, you guys, let's take a look at Bitcoin real quick. We do have that position going. I'm looking for this high to get broken right here at 63,857. Let's take a look at Bitcoin real quick. See if we can identify some more of these things. So just right off the back, it's looking like we're getting this inverse head and shoulders. I dropped this in the group earlier. It looks like we may be getting this already, like right here. So here we have what, a reaccumulation possibly. Boom. And then boom, maybe. For Bitcoin, be looking. So here's that fair value gap was closed up. Because this candle was like wide open. But these candles, here's our setup. Descending channel. We got our impulse, descending channel, and a break. We're back inside of this channel. So here's a resistance. And also, if you notice, here was like what we're referring to as a stop hunt. Wasn't long after that market took a crap. But so price is being resisted at the top. That's our resistance. We are going to cover some different price structures. So like these inverse head and shoulders and support and resistance. And that'll be it for the group. But for the misfits. But if y'all have any questions at all we're looking for on this, then just reach out and holler. Trying to see if Bitcoin is wasn't expecting to do any trading today, but it looks like we do have a full inverse head and shoulders right here. And like I said, a lot of the times, the majority of the time, doesn't mean this time, but the majority of the time, this is a sign that this reaccumulation would continue to go up. So that's more of a subjective type of trading. We're getting our retest right now. So if this, forms some kind of structure, we bounce up out of here and out of here, then we'll be looking at some other coins to get in on and leverage. So anyways, you guys, that's going to do it for this one. If y'all have any questions, just reach out and holler, drop a comment, send a message, and we will holler at y'all in the next one. See ya.